Welcome to TheoTrade. This is Don Kaufman. It's July 11th, 2025. There is just over an hour to go to the cash close here on this Friday afternoon. S&P's right now down some 12 handles. You know, that line that's right here in this chart's kind of towards the middle of your screen. You know what that represents? That represents massively unchanged for the entire week. How very unusual of a trading week. Kicks off with a little bit of a bang, some sell side activity. Then what did we do the remainder of the week? Absolutely nothing. You know, initially, let's actually jump to this. Initially, an overnight trade, I'm actually referencing last night, some pretty serious sell side activity. Once again, okay, we're talking about tariffs. You know, and it's kind of entitled this video, you know, the market's kind of been put on notice because taco time is officially over. And taco, of course, is the acronym for Trump always chickens out. But yeah, that's a big opinion piece right off the bat over here. I'm going to tell you right now, I do believe that taco time is most definitely over in this marketplace, and that, people, is going to have a host of implications that we are going to discuss here, of course, on this TheoTrade weekend update. So as I was saying a moment ago, the S&Ps are down 12, and cruising over to the S&Ps, you know, we started off, as I said, the trading day with a little bit of a bang, but it just completely died out. We're doing like 800,000 contracts. The crazy portion of that, you're like, oh, 800,000 contracts, not too bad. We had already done 208,000 contracts before the cash open. It's just interesting because the price action was like before the open, and we just kind of drifted a little bit higher right now. Nevertheless, as this week has kind of progressed, the volume, which it surged early in the week, the volume has completely dissipated. And why I spend time on that, it's indicative of, you know, big firms out there hedging, and of course, you know, people like it's the summer doldrums. I'm not sure that exists anymore. You know, seasonality for trade, in my opinion, doesn't really exist because servers are driving most of the trades. You don't feed them, they don't go on vacation. Nevertheless, if you actually look at volume, we're lucky to do in most of these minutes 1,000 S&P contracts in a minute, which is incredibly light. Okay, but let's start to kind of break down some of the price action that we've seen. All right, so the manic movement that I was talking about last week, it's persistent in a handful of stocks. We're going to talk about musical chairs with big tech in a moment. So that manic movement is still very persistent, but here in the S&Ps, things have kind of cooled a little bit. And I'm going to bring you into a 180-day 4-hour chart, and I'm going to show you exactly why I'm doing that. I'm also going to come in here and contract adjust. So I go to futures, I go to adjust for contract changes, hit apply, hit OK. Just gives us a much cleaner chart. And the reason I'm bringing up such a substantiated chart, let's kind of zoom in a little bit, okay, on what I want you to see. We went in this massive period of consolidation. I mean, basically for all of May and June, we kind of consolidated, right? And then let me actually kind of do a little bit better job of highlighting this. Okay, period of complete consolidation. We effectively break to the upside. Where are we right now? Absolutely nowhere. We're stuck back, you know, in an incredibly tight range. So when I say that the marketplace cooled, again, you know, don't take my word for it here. Just take a look at the SPX. We're going to cruise back over to the SPX. In this case, we'll go back to a daily chart. Throughout the course of this week, what do you got? You got absolutely nothing. Okay, so we are, for the most part, at the exact same point that we were, for example, last Friday. So this is 6 trading days of absolutely nothing. And I have to tell you, I am a little bit surprised. Okay, I'm surprised because the market internals right now, they absolutely suck, which I am going to talk about again here momentarily. But I just wanted to actually show you, you know, technically speaking, what's going on. All right, we went from this, you know, huge period of like 2 months of a marketplace trapped in a volatility box. In the last 6 days, okay, all we're seeing is kind of noise back and forth. But at the same time, okay, there's still some manic movement. You know, when I start talking about like, oh, manic moves, what am I referencing? Of course, you know, I'm going to look over at stuff like NVIDIA. This is completely one-sided movement. Of course, I'm going to look at stuff like Microsoft. It's completely one-sided movement, okay? And this is, and continues to be, if you will, like musical chairs in the marketplace. When I call it like musical chairs, it's, you know, every day everybody kind of plays a little bit of whack-a-mole, you know, like, okay, today is Amazon's day. Let's just buy calls on Amazon. And okay, today's Meta's day. Today, you know, obviously is not Meta's day. Meta, interestingly enough, has actually flattened out from some of its recent highs. But again, you know, okay, today's Broadcom. Okay, Broadcom obviously is flat today, but it's had a lot of positive days kind of back to back. So when I talk about musical chairs with big tech, look, I don't think this is necessarily a good thing. Okay, what you've basically got is the S&Ps, right, being sustained at these levels being 63.11. The S&Ps are being sustained at these levels, but it's you know, 1 or 2 stocks, maybe 3 at most. You know, it's become like the one stock market, which I've reiterated time and again. I'm not telling you anything you're not aware of. Okay, but the reason I call it musical chairs is, you know, one day you actually see, you know, Broadcom pop. Okay, the next day Tesla, you know, makes a strategic move to the upside. NVIDIA, okay, NVIDIA hasn't really had a down day, so let's not even consider that one. Even Google today, Google's actually got a little bit of a bid, been some incredible one-sided trade. But we're starting to get into a period of time where there's got to be concern because other sectors are not necessarily doing well. Okay, I'll come back to taco time in a second. I do want to move forward to some of the market internals. Okay, and what I'm looking at when I start talking about like market internals, okay, we're going to cruise over to this heat map right over here, index watch. Okay, and I'll just start looking at like things like advanced decline line. The reason I'm bringing up advanced decline line, as this actually loads up over here all day long, I've had problems with Thinkorswim. Okay, I have clearly had more caffeine than this entire trading application has. That is very evident at this point in time. Nevertheless, the market internals, okay, today they've sucked. They've been bad all week. So if you guys do look at what's termed, you know, market breadth and so forth, it sucks. The S&P 100 this morning actually had as many as 92 decliners on it. Okay, and yeah, you know what? This does matter. But at the exact same time, I can make an argument. There could be 5 stocks up, and that would be enough to carry the damn market. It's crazy, right? But as I said, it's a game of musical chairs where all of a sudden, okay, the music stops, nobody's left with a seat, and that's the reason I'm calling it kind of musical chairs. That, and I do enjoy my analogies. There's no question about it. Now, okay, I think people get it with like musical chairs inside of tech, but at the exact same time I'm saying that, like, ladies and gentlemen, I'm not going to rush out to short Microsoft at this level, especially since earnings are right around the corner in here. Okay, I think there's a lot better positions that I can take than trying to, you know, short some tech. But when I do talk about, again, market internals suck, take a look at the financials, lower edge of the expected move, right? I mean, that they're getting whacked, and that's, you know, fairly big sector. I was talking about this in the Wednesday video. Okay, in the Wednesday video, I was talking about XLP. That's the lower edge of its expected move. Like, there's a lot of products in here, a lot of individual stocks that are getting somewhat clobbered. Okay, I mean, like JP Morgan, it's unusual because JP Morgan has earnings coming out literally early next week, and yet it's below the lower edge of the expected move in here. And it's not alone, but at the same time that I'm saying that, I'm like, oh, there's musical chairs. Okay, you should be a little nervous. But at the same time I'm saying that, like, I'm not seeing any movement in like volatility, meaning that no one's starting to step towards the door. Okay, and that's what I look for. Like, I look for, like, look, the VVIX is not going to tell you if volatility is going to rage, right? The VVIX, though, can tell you if institutions are starting to buy calls to hedge out there, right? Skew is high, but I'm not telling you anything you don't know. Skew has been high. It's been, you know, extraordinarily high. It's come down a little bit, but still net skew is actually high. But volatility is not, and I want to make that clear, is not making any strategic moves, which in my opinion is opportunistic. I think that, you know, you want to be long volatility here all day long. Okay, and I made that mention, of course, last weekend, reiterated it on Wednesday, and here we are a week later, and I'm still saying I want to be long volatility. Okay, I got nothing but time, baby. Now let's cruise over, as I was saying about market internals kind of suck. I think people get it, and the S&Ps, even though the S&Ps are flat, okay, a lot of sectors out there that are definitely taking some heat. Again, I went over these sectors on the Wednesday update, other than of course XHB, which broke to the upside over here, which is shocking. But most of your major sectors, okay, took a little bit of a hit. All right, most of your major sectors took a little bit of a hit over here. Okay, most of them are not faring all that well this week, but we've gone through, okay, again and again. All right, onward and upward from that point. Now, this is much more of an opinion piece, but I do want to be heard on this. Okay, what I call taco time. Okay, taco is again, Trump always chickens out. I hate that acronym, but it is amusing to use taco time. Okay, taco flavored kisses. All right. Anyway, this is more like Lucy in the football. It's becoming an absolute joke in the marketplace at this point. Not the acronym taco, but for the most part, there was a July 9th deadline. The last time I looked, it's July 11th right now. Okay, so the July 9th deadline gets moved. Now it's August 1st, but at the same time, there's an August 1st deadline. Okay, there's a lot of tariffs being thrown out. I mean, there's some big stuff being thrown out. Obviously, the markets last night, okay, sold off, okay, on the news of a pretty significant tariff being thrown towards Canada. Obviously, they're trying to get them to the negotiating table to break them, prior to the August 1st deadline. Remember, it's not July 9th anymore. Now it's August 1st. Again, Lucy in the football, they pull the football, okay, I fall flat on my beep. You get it. All right. The one, though, that really kind of gets me, that's not being discussed nearly enough, and again, that's my opinion here, but Brazil, okay? Brazil's like, second to only China in terms of trading partner. Brazil's number 2. And you can see the Brazilian market, it's EWZ. Again, it's EWZ. The Brazilian market is reacting to this. United States doesn't give a crap. That's why I'm actually telling you right now, I want to be long volatility. I don't care what anybody else says. I want to be long volatility. And there's a lot of other products that are moving, okay, because of some of these tariffs. What are some of the products that are moving right now? For instance, you could probably blame the bonds a little bit, okay? But I looked at things like crypto, okay? This is actually not a half bad hedge. Again, some of the tariff talk, and Bitcoin has actually broken to the upside in a substantial move throughout the course of this week. In fact, when I apply auto expected moves, okay, take a look at that one. It's actually one of the bigger moves that you've seen recently inside of crypto for a smash of expected move. There's not too many places in this chart that you can see a break that significant, okay, as you do right now. So Bitcoin actually breaks to the upside. Again, I don't want to necessarily say like, oh, Bitcoin broke to the upside because of tariffs, okay? But there's implications, obviously, on that particular front. Anyway, I want to be heard on this one very, very clear, okay? To me, the taco time is over. And I've stated that, and I'm going to state it again. What that basically imparts upon you is there'll be some negotiations, okay? If things are not actually signed, sealed, and delivered by August 1st, things are going to get wild. And the closer we actually get to that date, the more stringent these deadlines are going to become. There's going to be pressure being thrown out left and right. We're going to start to have to worry about tariffs again. That was kind of off the table for a period of time. The markets should start getting concerned again. Maybe they are. And maybe that's exactly why we're seeing things like financials take the hit that they are. Okay, financials are definitely feeling something, and I'm a little bit surprised, even taken back by financials a bit, taking this much of a hit throughout the course of the week. Whatever, it's just the lower edge of expected move, but I wouldn't have anticipated that prior to their earnings coming out this next week. All right. Let's move on. I've already covered a little bit about market internals. Again, the advanced decline line sucks. Again, the market breadth throughout the course of this week has just not been good. It's just there's a lot of market internals. You can look at ticks and so forth. Okay, even the ticks. Okay, they're in the dumpster. It's dumpster diving ticks throughout the course of this week. Dumpster diving in terms of the advanced decline line as well. All right, ladies and gentlemen, let's shift gears completely. Let's come to the bond market. The bond market hasn't been a real and definitive concern. Well, until today, of course, because, well, today it's back down $1.10. And of course, this is where you go like, well, what the hell's causing that? Well, what's interesting, what is probably causing that? There was some sell side activity overnight with the remainder of the marketplace. Okay. But the bond trade, this is becoming serious again. You're like, oh, whatever, man. We're only down to like what? A 112? I'm telling you, if you start to get down to 111, you're 112 and 30 ticks, which is basically 113. Start to get down to 111, which is 2 points away, you got issues. Because at that point, you're threatening, some of the recent history lows. And when you start to open up the chart, let's open up a max chart. Let's get crazy. You start to open up a bond chart. Oh, that thinkorswim is speedy today, but you start to open up a max chart. And again, you got to go back, what? A decade and a half. You come back to like the financial crisis to actually see bonds lower than they presently are. So you got to pay careful attention to this because it doesn't matter what you think. I'm going to tell you what I know. I know if these bonds start breaking lows, okay, everybody's going to start to freak. Why? You're going to be rolling debt, 4.5%, 5% on the 10-year. Good luck with that. Good luck with that, Scotty B up there at the Treasury. That's going to cause some pressure in this marketplace. So the bonds are once again on the dance floor to cause some pressure. And I'm going to tell you the bonds are probably one of the most advantageous trades. When it comes, I will let you know, meaning that when the bonds start to sell off, okay, I think it's going to be one of the most advantageous trades of this decade. And I've done the trade already, and I'm going to reload again. So the big bad bonds are so very back. All right, next, we got earnings coming up. There's not that much to say in the front other than, again, I'm a little surprised at what I've seen in the financials thus far, them selling off a little bit. There's also like next week, we'll have earnings from like, the likes of like Netflix. Okay, I don't have a lot of concerns in that one. Like Netflix doesn't really resonate anymore with big tech. It doesn't. Okay, and Netflix can maybe influence something like Disney because they've got streaming services, but Netflix is effectively right around the corner. They did peak though at 1340 and change. And here's another one. There's some pretty heavy sell side activity prior to the earnings. Okay, is it a little bit of a tell? Not exactly sure, but ladies and gentlemen, there is almost a 100-point expected move next week around the Netflix earnings. So strap in for that one. So earnings on deck. And yeah, you better believe I'm going to trade some of the earnings. I love that stuff. Earnings flips. Oh, flips is coming back. For those of you that have no idea what earnings flips are, next Thursday, I'm actually going to do a live session. I'm going to trade live. Okay, next Thursday, everybody's invited. Members, non-members, okay. Bring women and children first. It's going to be good. I get excited for earnings, but I'm actually going to be trading some of the earnings. You don't have to know anything about earnings. That much I promise you. Okay, earnings flips though are going to be back in style next Thursday. I'm going to be executing some of that. I'm going to do it right in the time frame before earnings, which is going to be like 2 p.m. Eastern time. So be on the lookout for Don getting crazy with some earnings. All right. I did actually post a trade this week, actually in silver. Okay, people, we caught all of this one. This is actually the second time I've done this recently. I caught the silver move right here, and this popped to the upside. Here's another one. I literally put the trade on yesterday, caught the pop to the upside today. If you're kind of curious about the trade, they made between 30 and 40%. Anybody that actually placed the trade made between 30 and 40% on this one. Again, I'm just showing you a little bit of the order flow. Purchase for like 70 some odd cents, close for $1. As I said, though, this is the second time that I've caught it. Okay, second time I've actually caught a similar trade in silver in the last couple of weeks. Okay, you can see another one where I actually literally put it on for 97 cents, closed the very next day for like $1.46. Winner, winner, chicken dinner. So some nice gains actually taken on silver. By the way, I'm over and out. Out of the contest. All right. Last but definitely not least. Okay. So again, there's a little bit of rumblings of some volatility hitting the marketplace. You can see this last hour over here. Let's get crazy. Okay. By the way, I got to look at NVIDIA. Still got a position open on NVIDIA. Oh, I'm right on the dance floor of making some money on NVIDIA right now. So a little bit of volatility starting to hit the marketplace. But again, lo and behold, the S&Ps are down 22. Okay. What's the cause for concern? To me, the cause for concern right now is to deal a lot with volatility. So this last week that we just passed through, right? So we just had a 5-day trading week. I mean, the marketplace not doing very much. And when the marketplace doesn't do very much, okay, that just basically eats volatility alive. You know, the VIX is down at 16. I can't even believe I'm saying that the VIX is at 16. Okay. With the Trump presidency, I'm sorry, I can't price volatility at 16. I can't. Why? Look, that's not like a negative connotation there. Okay. With the Trump presidency, okay, anything can happen, you know, especially coming into a weekend. So for the most part, I think volatility is incredibly low. And I'm going to reiterate for the third time in this video, I'm long volatility right now. Why? Okay. Because the administration is unpredictable. How about that? It's good enough. Good enough for me. Nevertheless, as I was saying, one of the problems you got right now is this last week of trade. Okay. What did really have this last week of trade? You had a $93 expected move. Actual move? Absolutely nothing. So what that's going to do is it's going to collapse down the volatility even more. So if I look out to next week, okay, right now, what are we pricing for next week? And again, it's not over. This thing could get crazy. You know, the volatility could still pick up. We still have 55 minutes left to trade. But if you look out to next week, holy crap, for a full week, the expected move is 86 bucks. I'm sorry, but that is inherently low. Okay. That scares the living crap out of me because we've already, overnight trade, we traded down to like 76 over here. The S&Ps had moved almost 50 points. They moved almost 50 points in a day. Why the hell do we only have like an expected move of 86, okay, for an entire week? So first of all, with a little bit of sell-side activity that's hitting the marketplace right now, I'd pay pretty careful attention to this $86. That could even expand out a little bit. But the bottom line of what I'm saying, okay, is I'm sorry, that volatility is just too low. I will not, okay, be anything. I will not be anything, okay, but a buyer of short duration options right now. I'm going to be a buyer of short duration options because we could smoke, some 80. By the way, as I'm saying this, it's no longer $86. Now it's actually up to $88. Okay. Why? Volatility is starting to pick up a little bit over here. Again, why is the volatility starting to pick up? The S&P is starting to sell off. I don't know. Let me throw one out for you. The Trump administration. Okay. What's going to happen over the weekend? Probably throw some more tariffs out there. It's a party, people. Remember what I said. Market's been put on notice. Taco time is over. There's no more talk. It's all going to be real. Okay. And there's going to be some tariff scares. And I think that is going to be your opportunity moving into the future. Thanks, everybody, once again for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.